Welcome to our first Saturday Bright Investor office hours of 2025. Pretty pumped. And as always, this is a time for all of us here at Bright Investor to get together and ask questions about market research, analyzing deals, how to use the platform better, what's coming out soon, what things you'd like to see on the platform, any feedback, ideas, or questions you have. And it's a time for me to make sure that I'm providing as much value as possible. So absolutely happy to be here. And I'll go ahead and open the floor up. Hey, Chris, how you doing? I'll go ahead and open the floor for questions right after I make a short announcement about the, let's see here, new version of Bright Investor that's being launched this week, this weekend. And we have another version should be coming out another week or two as well with a bunch of your guys' requests. So look out for that. We have some upgrades coming out here again soon with some of your guys' user requests. So after that, I'm just looking at my list here of everything that we have going on, and we're looking good. All right. Thanks, Chris. Appreciate it. All right, so I'll go ahead and open the floor up for questions, comments, and would love to have you guys, anything you have on your mind, please just let me know. All right. No burning questions today. That's okay. Sometimes we have things are going super well and we don't have a ton of things that we need to get on the horn and chat about. That's not a problem at all. What I will do is take a second and introduce something that we soft launched on Wednesday evening session. And that is kind of an evolution of the Bright Investor office hours into Bright Investor Diamond. So if you weren't there on Wednesday evening for our last office hours, or got that email, basically after getting a lot of emails and requests on being able to take what Bright Investor does and turning it into finding deals and putting it into action and executing on some building teams, building a system, being able to have kind of that one-on-one support to take your real estate investing to the next level. We introduced Bright Investor Diamond. And so I have been basically beta testing this with a couple Bright investors over the last couple months, working with them one-on-one, taking one Bright Investor user from no real estate to, having her financed, getting her property manager, getting her an on-the-ground agent, contractor, and two offers going out here this week, actually, um, and being able to do it all from the comfort of being, a couple like 500 miles away from her target market. And so I am launching Bright Investor Diamond. I have the information right here in the chat. I'll go ahead and put that down. BrightInvestor.com/diamond. And essentially, this is an opportunity to work one-on-one, even beyond the office hours, work one-on-one for 8 weeks as a kind of an accelerator, and then get one-on-one support for the next 12 months, working with me directly. And with that, you get we're offering, for some free merchandise from our Bright Investor store, as well as a couple other bonuses and gifts and tricks for being a Bright Investor Diamond member. But this is a way that we have created an opportunity to essentially work with only Bright Investor users on a one-on-one basis to expedite their real estate success. So if you're interested in checking that out or learning more about it, you can go to that link, brightinvestor.com/diamond. It is only available to you guys, so people who are existing Bright Investor users. And it's something where I'm only going to be able to work with a couple people one-on-one. Uh, the office hours is my way of offering some group attention, but everything in Bright Investor Diamond is exclusively one-on-one work and more of an apprenticeship model where I'm in the trenches with you, doing whatever you're at in real estate, wherever you're going, whatever you're trying to do. So for that reason, I'm only working with a couple people. Otherwise, I can't give everyone the attention that they need and the attention that I feel that they deserve. So if that's something that you think would be really beneficial to help you really make sure the 2025 moves your needle forward in real estate, and you want that one-on-one attention, and you don't want to be one of 300 in a kind of another kind of apprenticeship model, then I think Bright Investor Diamond is probably going to be an awesome option for you. And of course, we'll be using Bright Investor the entire time on finding opportunities and making things work. So if you have any questions about BI Diamond, what it looks like, how it operates, you can feel free to ask me questions about that here as well. Also, just open the floor up for additional questions on some deal analysis or market research too. All right, Chris, I'll call on you. How you doing, man? So I think we have two accounts in here for you today. One's trying to load in, and one is there you go.
Hi, hi, me?
Yeah,
Hi, I'm moving to LA into the smoke country. I was supposed to move this Friday. I'm moving next Friday. So after that, after I establish myself and the wedding, my son's wedding in Guadalajara, I can't wait, And I received the other emails that you sent. I thought was awesome, like the deals you sent, but I have no time. I'm packing, so and closing shop and my friends are dealing with the smoke and some friends have lost homes so but it is what it is.
wow,
Yeah, I've never
absolutely.
my plan is to ask you where to buy there in LA, but I know it's not going to be happening there, but they say of course that the prices are going to skyrocket now that we have this disaster, so I'm
Yeah,
happy
I
to see
mean,
you.
yeah, yeah,
So,
absolutely. I mean, it sounds like you've got a lot going on right now. Absolutely.
yeah,
You
I
said you're
think I'll,
moving,
yeah.
son's wedding, and a couple other things.
My work, yeah. So, but I just saw the, what is it, recap, that
Yep,
flyer. I just saw it. I sent it to my son to Guadalajara. I said, when you start to look for real estate, here you have. So your
exactly.
flyer
That's why you
went
built
far
it.
away. Yes, yes.
Perfect.
But happy to see you. It's like always learning something and putting in like I was trying to get myself on camera. Okay, here. It's a mess here. So, yeah, all the packing stuff, you see.
Oh
So,
yeah.
yeah. Yeah, and minimizing and, too much. So, yeah, um, you're doing such an amazing job always, and you're such a giver. And really, thank you for that because, you know, it's people like you are needed in this world. So thank you again for the work
Absolutely.
and the progress and everything. And I said hi. I did send the congratulations for the baby because the other email didn't go through. But when I
Yeah.
received Drew's email, I found out he connected back with me. And you have somebody new in the team, right? Right? There's a new
Um,
person.
we did. Was it Braden you're looking at, or someone else?
Who?
Braden, by chance? We have a couple people on the team that
Oh, well,
have
there was an
joined.
email sent. I mean, I have millions of things. Sorry, I forgot. Yeah. So, yeah. So I said, oh, okay, there's a new person here to be. But yeah, sometimes I go and I look into the map and that's, but now everything is frozen. I had to change my ticket for a week later because I'm not ready and I'm not ready.
Hmm.
I have, this is a lottery apartment. The one
Hmm.
I won the New York City lottery,
Right.
and because I work for the city, that gives me points, but it's not the place where I want to go to be.
Right.
So leaving this, it is finally subsidized. You want it or not, it's called subsidized because the city is subsidizing HPD, the loans, for them to build this, but then they have to rent to all the Ds, right? Disabled, disowned, whatever, divorced. So
Hmm.
old age stuff. So yeah, but so I have to be careful. They change management. They never know the new guys
Hmm.
what. But they're here downstairs below me, and they're nice. So I'm dealing with that. Also, a lot of little things. Medicare changed to LA. New dog, the old
Right.
doctor. I found my old doctor. So stuff like that. But I want to do those exercises on when I have a little time, maybe on airplane. Those emails that you send with, oh, look at this, and I think it was
Hmm.
where was not Minneapolis. It was in Ohio, or was it?
Yeah, we have a couple in Ohio. Yeah, that we send
Yeah.
out.
So I'm like, I have to do this, but I can't. I should not be even with you now, but I'm addicted. So yeah.
Happy to help. Well, yeah. When do you have some time you want to, feel free to bring those deals here and we can take a look at them.
Yeah. Let me settle. I have this apartment coming up in Long Beach, which is like in the middle of the fires. My son is south in Orange County. He's like, Mom, don't bother me. There's no fire here. Well, they have, of course, they have the red thing, they be careful. But we are scouts. And I said, you better get ready. You have 3 kids, 2 kids, your mother-in-law, have a bug out bad because you are in the pink zone. Mom, and then the next day, Mission Hills, like what, 10 kilometers from them on fire.
Mm,
And
yeah.
no, it's people are losing everything. And what is, they say going to build a smart city now in that area. I think you heard that.
Yeah, 'cause that could be pretty cool. Things happen like this. It can be a chance to change a community, which it's a horrible tragedy when things like this happen. So we'll just see how the city chooses to bounce back. You'll also notice there are whenever things like this happen, same thing that happened in Hawaii for like Lahaina, and now there are some real estate investors who choose to make this a buying opportunity, and so what they will do is they will start sending direct mail and skip tracing owners of those houses
Hmm.
and saying, "Hey, let's go ahead and make an offer." Like a lower
Yeah.
offer on folks who have just experienced, maybe a family home burning down.
Mm.
Um, those investors, actually, there are a couple of friends of mine who own direct mail companies for real estate investors. They are pausing all orders to Los Angeles right now and areas like that, in kind of solidarity of they don't want any predatory practices of real estate investors trying to pick up houses too cheaply or off a bad situation. So I think this a situation like this is a really good test of people's mettle when it comes to how they're going to operate their business and what they consider the right move in situations like this. So I know Dolores being in Hawaii, I'm sure you're very familiar with this after Lahaina as well. Yeah, I, absolutely.
Okay, I changed to my computer back because you were open here. The worst calamity is the water contamination. You cannot even touch the water now because it has all the fire retardants and other chemicals.
Hmm.
And ocean also is contaminated. So you cannot go and take a bath in the ocean. People that would, just used, you cannot go into pee even there. Sorry, guys, but that's a reality. So I don't know where they're going to get the water from. So I was like considering should I stay here, but here it's so detrimental because of the air contamination, traffic. I mean, police
Sure.
noise. I mean, I'm sorry. So I want to be closer to a family, but that's a thing to consider. I don't know what's going to happen, but um, yeah. So you have news about what's going on with Hawaii, yeah. And it was another place that was a big fire also, and the same thing is happening. And then
Hmm.
Florida also, when Florida had all these big chunks of properties that were raised down, like my friends live there, and some after what it was the big tsunami was it? What was it? I forgot. Like a year ago.
Hurricanes down there.
Yeah, and also the homes was just nobody, were all raised down and nobody's buying there. I don't know what they're doing parks, I think. But we'll see what happens in LA. I mean, all the
Yeah,
time,
that's
like,
all we
why
can
did I
do.
sell my house, right? Why did I look into the future? I know I sold it, but you know,
Yeah,
today,
we'll
our
see. We'll just see what happens. Yeah. Uh,
thanks.
Yuri, how are you doing? It's been a while since I've been to chit chat with you. How you been? Looking for the unmute button. I've been there. There you go.
And to mute myself, so
Oh, you had it, Yuri. There you go. Perfect. How are
There you
you?
go. I was just working on my microphone. Everything's good.
Good.
Well, I live in LA, so I'm going through the drama.
You're going through it right now. Okay. How are
Right.
you? Safe?
Well,
Okay.
everything is good.
where
I
are
was
you?
Okay.
evacuated. I was evacuated on Wednesday, but now I'm back at home. But there's a lot of people that lost their homes and they're really devastated. It is
Yeah,
a very traumatic experience, but we all have to continue living and move on.
absolutely.
And then find a way to
Absolutely.
rebuild the city and people eventually will go back to their normal life, if you can call it normal again.
Hmm.
But
Absolutely.
everything else is good, so I'm here.
Good. Well, I'm glad that I'm glad you're safe. Glad that things are going well out there.
Can I
I used
ask?
to live. Oh,
Can I
oh,
ask
yeah, go ahead,
where are you
Chris.
in LA, dear? Where are you?
I'm very close to Pasadena. I'm in Glendale.
Oh, I'm going to Glendale, Sinclair
Yes,
Avenue.
yes.
Small
That-
world.
That's where I'm at.
So, somos vecinos.
Yes, yes, yes.
I love your background. He's like, look, today he is the executive guy here with his background.
Oh, it's nice meeting
Yeah,
you.
Yeah,
yeah,
the smoke is the inhalation. Be careful with that because I work in medicine, right? So the air pollution with the small the worst particulate is the 0.2 microns that get embedded forever in your lungs. And all that moved from Ventura into LA 2 days ago. So you have to check that, and really, if you go out, I don't use masks, but with this I do. You know, you don't want to be exposed to this because chronic disease and heart disease becomes it's a whole thing. So please take care of yourself.
absolutely,
Very good. Yes, that's true.
absolutely. And Dolores, how have you been? What's going on in your real estate journey? What's going on?
Good. Things are going good. I'm working on um, rehab on my Kansas property that I purchased in December. So that's kind of that has been my main focus for the last like 4 weeks.
Okay, fantastic.
But I'm
And
actually
how's it?
looking at another property, actually here on Oahu. Um, is it something you think we could go through?
Yeah, absolutely. We can go through that.
All right,
What
thanks.
you want to give me an address? We can go and check it out.
Yeah, it's 84-918 Farrington Highway.
84-918 Farrington Highway in Wanai. Is it Wanaya? Wanai?
Y&I.
Waianae. Thank you.
Yeah.
I know some information. Okay. Okay, so I'm gonna go ahead and share my screen here. Profiles are in. Okay, it looks like it is new to on market. And
So keep the picture up. Let me just share a couple of things of information that I actually got from one of my real estate friendly realtors. So you
okay,
see how it's an L shape?
yeah,
So this property is over 15,000 square feet. And in Hawaii, in this particular area, you can actually break it up into R5s. So
okay.
this potentially could be 3 lots.
Okay. So there's a
Uh,
lot of opportunity here. Okay.
yeah, so I kind of just want to throw that into the mix as well as you're looking at it, okay?
Okay. Absolutely. And as a reminder, though Dolores were there on Wednesday, photos are coming to BI. So
Yes.
you know how we have this photo right here. Think of this next release this weekend. When you hover over this section of BrightInvestor, a little arrow will pop up,
Mm-hmm.
and you can just click through all the photos there and see what's going on there. So
Awesome.
that's great. I'm gonna change this now to on market, change that to 850. That's what they're listing it for, and save my settings. Okay. How long has the guy owned it? Not that long, less than 2 years. Okay. Guy lives in he lives in Hawaii. Okay, on University Ave. Wonder if he's a professor potentially. That's interesting. Okay. So when I'm looking at this property, right, overall, and we're looking at the L shape, I think the development side is really interesting. From personal experience with colleagues of mine, I know that developing in Hawaii can be hard, and the permitting process can be very hard, to say it lightly. So I like this
Yes.
fact that, oh, go
Let
ahead.
me share. So if you go into a building, if you go into a property and you don't have to change the walls, you can do what's called a repair permit and you can get that online and you can start right away, easy. It's if you
Yeah,
have to add or, you know, tear down those types of things, those permits are
yeah,
taking a long period of time.
yeah. And so in this case, right, this is the property. And so this could be just split into 3 lots. the big question here is accessibility. So for
There is a
example, if you were to,
driveway. So you see where you on that line where you see kind of the on the left, yeah. So that is actually a driveway to get to the back properties.
okay, that's a driveway going here. Okay.
Mm-hmm.
Okay, that's good. That'll probably need to be paved because what we're suggesting here then is right, this becomes property A, this becomes
Right.
property B, and this becomes property C.
Yeah.
So street access is going to be a issue because of this because what we're looking here for is I think if it's thinking about practicality wise, we're asking all three property owners to share one driveway. And so this property owner, can you park
It'd
on the
be
street
two.
here?
Because the
Maybe.
one property in the front has its own, on the left side, that's its own garage, like driveway
Okay.
entrance.
Okay, great. So then this becomes the driveway for access for these two. Okay,
Right.
that helps. That helps there. Okay, and so with three different lots, would you be looking to build up some things like a build to rent scenario? So ideally you pick them up, refinance, and hold it for a long term?
So my thought would be to fix up the front house while I'm getting the permitting to CPR the property to split it into the three.
Okay,
Because the front house is a 3-1.
okay,
I'm actually going to go look at this property on Monday to see if my thoughts are kind of viable, but it's a 3-1 in the front. And
mm,
if I get a repair permit for that, by the time the CPR is done, probably the repairs would be done on the front house and I would be
okay,
able to sell that one off. So that one would be a fix and flip in the front.
okay,
Um, and then the back is what I'm thinking of potentially having two builds and either rent them out or two builds and sell it.
okay. So you'd be okay, so you'd be repairing this. This would be if you buy the whole lot, purchase, renovate this one while processing the lot split here and starting the development process. And then this is basically your injection of equity into
Correct.
at some point down the line, maybe 3 to 6 months, you sell this thing off and you're able to take those proceeds and, either take them out or inject them into these developments and then either sell those off as well. Okay.
Right.
Okay. That makes sense. See what you're saying. So let me see. What do I have for a 3-1 in this area? So I
Yeah.
have rent comps. Oh, go ahead.
Rent is really hard to do here to do
Yeah.
long-term rents. Yeah. So,
So
uh,
so many people are doing short-term rentals, aren't they? Right around here.
well, they can only do it in certain places on Oahu. So this area
Hmm.
is not able to do short-term rentals.
Hmm.
There's only 3 spots on Oahu that you can do short-term rentals. Waikiki, Turtle Bay area, and Ko'olina. All three are resort areas already.
Okay. So I've been turning off this 3-1 based on things that are nearby, right around a little over $2,000 a month. The 3-1 looks like what I'm seeing here.
Mm-hmm.
Insurance estimates of about 180 a month. Market trends. Let's talk about this a little bit. So the primary strategy we're looking at here is a splitting of lots in likely scenarios that you're going to be selling off the one that's in front and then building and selling off the ones in the. So assuming that's our going strategy, right now we're averaging right now about 75 days on market. So a little bit higher than I typically like to see for flips. And this is one of the major numbers we want to look at when we're doing flips because that factors directly into our holding cost, right? So it's
Mm-hmm.
going to take you the better part of 2.5 months to get this thing sold post listing. So let's say that you close tomorrow, probably looking at maybe what a 3 month renovation process potentially. Um,
Yeah, it'd probably take 4 months, around the same amount of time, that it
okay,
would
so
take to get the CPR permit. So
you're
three to
looking
four
at
months is a good estimate.
okay, so 3 to 4 months there plus another 2.5 months. So looking at a minimum 5.5 to 6.5 months
Mm-hmm.
to get to from now to sold. which puts you right if you were to close tomorrow, right, which isn't realistic. You'd be closing like a month probably. So that puts you first week of February. So that puts you basically in September that you'd be selling.
Mm-hmm.
So with this particular project, not that, hey, Hawaii is a very different market, but we'd be missing the historical peaks every year of May and June for listing. And we'd be listing this going into the fall season, right when kids are going back to school. Not necessarily the end of the world situation, but for right now, it's good for us to know that properties aren't selling like hotcakes at the moment, and they're
Mm-hmm.
not necessarily, as of the last couple months, just a little bit of a downturn in price per square footage. And median house price has been coming down from a peak of last July. So what we'd have to do on this is be extremely conservative on what that ARV is going to be, because what the market's showing us right now is that we should expect it to take a little bit longer to sell, a little bit lower price per square foot, and home prices have been eroding a little bit. At the same time, we know that the mortgage rates right now have spiked back up to their high of last July.
Mm-hmm.
So the couple of factors there that are making a flip. I'm seeing a little bit of risk going into this. Um, I would really like to see you run this as what happens if we just burr it out. And so
Mm-hmm.
maybe it's not a perfect burr, but if that first property gets renovated and you are able to put enough dollars into it to make it worth, X amount of dollars, instead of doing like a full 70 or 80 or 90%, refinance and pulling out as much equity as possible, maybe only
Mm-hmm.
pulling out 50 or 60% to where the rent of that $2,000 a month for that front property
Mm-hmm.
covers so you're breaking even on the front, and say we'll take out 50% of the equity, and I'm going to make an estimate here, right? Let's say that you buy it and you renovate it, and it's worth $1 million when it's done. Probably not $1 million. We'll call it 750 when it's done. 50% equity. Say you take out 350 grand to 400 grand. Then the front property you can hold for as long as you want, and it's just breaking even every month,
Mm-hmm.
but you've left 50% of your equity in there, so you can sell it and cash out the rest when the market's ready for you to do that.
Mm-hmm.
And then that other equity goes into your entitlement costs and development costs for the back two properties. So that's what I would rather see, as opposed to I'm going to get this thing in and I'm going to flip it in order to get my proceeds out. I feel like a 50 to 60% refi after getting the front property flipped is going to be it's the least dependent on outside factors way to pull some equity out
Mm-hmm.
for that property, based off what I'm seeing here for the marketplace.
Okay.
Now, on the other hand, right, we're also seeing, well, actually, the same hand, there's also been a spike in the number of new listings that are coming on the market right now. So there's a bit more competition from the flip side. So
Mm-hmm.
it's even more evidence for me that planning to refi the front as opposed to selling it makes more sense. But that
Okay.
also means is you're not going to get all the equity right off the bat. You're going to get only
Mm-hmm.
50%. So whatever costs that you are going to roll that money into, you need to account for only getting about 50% instead of the full amount. Does that make
Okay.
sense what I'm saying so far?
Yep, absolutely.
Perfect. Okay. Now, the other really, really good thing that's in your favor is almost 50% income growth in the last decade. I mean, that's up and to the right. That is perfect. That's beautiful, right? I like to see 15 to 20%. This thing's at 50. So you have a big skewing of higher income folks moving in, making more money. So the folks who are going to be able to, one, afford your rents, which is great. And the buyer pool who needs to be able to be high income to afford if you were going to sell this property off is definitely going in the right direction, right?
Mm-hmm.
We have people who are higher and higher income folks are continuing to move in here, and folks are getting more and more income. So definitely what I like to see, as well as the population growth of I like to see 10 over 10. This is almost perfect 10 over 10 as well. So I'm seeing, we hit a lot of demand to be here, more income coming in. Long term, I like what's happening here. So suggesting to you maybe burring out that first property, potentially even a second or third, not a perfect burr, but pulling out some equity. I feel
Okay.
confident about the direction the area is going for now.
Mm.
To be able to say you're probably going to be able to rent to people at higher rates, and you're probably going to have more demand over time because of these market trends.
Okay.
And based on some other 3 beds in this area, let me still take a look at. You said it's a 3 bedroom, 1 bath.
Yes.
Good. So glad we built in this edit fun feature. It's so freaking useful. Oh wait, gotta put there we go. Ah, it's so useful. Okay. Any other 3 beds? Here we go. 3 bed, bath. Here's some comps that I have. Okay, I'm going to go ahead and here's one. 84633 Manuka Street, Apartment A, sold for about 485 2 months ago. That could be a pretty good one. So maybe if you split off that front property, and that
Mm-hmm.
front house is worth maybe 500 grand, when you're all said and done, you could refi, pull out 250 to 300, and roll that into the next one. I think that makes a lot of sense here.
Got it.
But based off what I'm seeing from a property perspective, a
Mm.
rent perspective, let me just do the math on that really quick as a long-term rental. If you're renting it out for 2,100, and let's say when you're all said and done, that property's worth 500 grand, and you pulled out 50% of your equity, and let's say you manage it yourself, and your repairs come down a little bit, and your CapEx comes down because you just did a full renovation on this. Okay, so based off these quick numbers, if you have an ARV of 500 grand for that first 3 bedroom, you could pull out 40%
Mm-hmm.
of your equity, and that front property would be cash flow positive, or basically breaking even.
Break even. Yeah. Okay.
Because we set a repairs vacancy and CapEx to nothing, you'd be making a little bit of money every
Mm-hmm.
month,
Right.
which is great. Well, actually, we can get rid of that figure because you're spending them. Yeah. So that makes sense to me, right?
Okay.
That's something where, okay, great. This is all from a conservative approach, right? Saying, how do I
Mm-hmm.
make sure that you are successful as possible when the market is showing us that a flip right now is going to take longer to sell? It may not be, and like if you're relying on that income for that equity to do something else.
Right.
What I can tell you is that, hey, if we plan to renovate this, pull out 40% of the equity and use that is a much more conservative, less risky approach to pulling out at least some of that capital based
Okay.
off what I'm seeing here.
Okay.
And then down the line, right, let's say you repeat the process for properties 2 and 3. You have 3 properties you have 60% equity left in the deals for 3 different assets. Each of them are breaking even potentially, and you're holding them. And it's simply up to you to choose, hey, when do I want to sell these? When do these make the most sense? But I have 3 assets with a bunch of equity sitting in them. And let's assume that you also do 3 bedroom, 1 baths in the back units. I mean,
Mm-hmm.
let's assume that we get $500,000 per property. That's 1.5 million, 60% equity. That means you're sitting on approximately $900,000 of equity waiting for the right moment in time to sell in order to make that happen for yourself. For me, that makes sense
Yeah. That's great.
because with the permitting and the renovation process, I think we'd miss the peak seasons for selling. Because I'd rather you have 3 awesome properties that you have fully
Mm-hmm.
renovated, awesome, not bleeding you dry every month,
Mm-hmm.
and you're just waiting to cash in on that when that right offer comes in, you're not in a rush and you're not relying on other market conditions.
Right. Yeah. And the 2 back properties. So the one doesn't have anything built on it. The other one has like
Yep, right there.
I think it's like a 1-1 or a 2-1 or something, but it's in horrible shape. So it's truly a tear down and
Yeah,
rebuild. So both of those would be, full on new build
yep,
scenarios, which to your point earlier, the permitting for new builds takes a lot longer than
yeah. And so
than it does.
I don't think it makes sense to rely on the sale the first to like fund the back because the back
Hmm.
part is going to be a long process. Like
Yeah.
that can take a year and a
Oh
half
yeah.
to get
Hmm.
that back part done. And so I don't want you, I'd rather you have a property that's like, okay, great, the first one's done, I pulled out equity and it's breaking even for now. Now, this is what you're talking about right here, because here's the front property right here. Here's the
Yes.
front house.
Yes.
And then your driveway, you're saying is right here. That's the driveway going all the way back.
Yes.
Okay. So important thing
And
to
so it
note
would be
that
a shared driveway, right? So we do have that a
yeah,
lot in Hawaii. We have like a shared driveway that kind of gets you back, and then the property splits.
okay. So it also notice that it is a single wide. So it's just gonna be really, really important that we probably, I mean, we could pave it, be valuable. But single wide back here. So tenants are gonna have to be assuming that's a local market component that people are used to sharing a driveway like this. Great.
Hmm.
But I also know that when it's single wide driveways, if someone parks or someone leaves the car there, XYZ, it's something that can cause some contention. So my
Right.
initial thought is it possible to make that a double wide, or is it possible to make it something where more people can get through? Maybe, maybe not.
It
It's just a
could be,
question.
to your point. I would just have to change I think the layout of the property, right, for the first one. And I don't know how close that could be to the home itself.
Yeah, because you
Yeah.
could be running right up against the house there in
Yeah.
that situation.
Yeah.
So I think it's something to consider,
Hmm.
where the property's at. But I mean, from a view perspective, I mean, that doesn't suck. That's
Yeah, right
pretty
across the
pretty.
street is there's about 3 or 4 brand new builds that
Oh
are
yeah,
um and they're over $1 million. So, that's
yep,
definitely
Can
um
can I add something to that garage situation?
yes.
sure.
Something that I've seen where I lived in California. I know she has the garage on the other side, but what about if she's going to kind of rebuild and demolish and whatever it's going to do? Where is that entrance? Do a turnaround in the garage there and on that side. So part of the house becomes the garage, so they will never stop on the driveway. They will have the turnaround to go into the garage on that side. And forgive and kind of not to have all these potential nuisances with the back.
I'm trying to wrap my mind around that.
Yeah, like
Visually.
I see very clear. So move the house, build the house to where the garage is, extend, and what is there where you're pointing that
Yeah,
right
this kind of
wall?
carport here.
Yeah, that turn the house towards that side, build towards that side, and make a port or a garage or whatever on the other side. So that area becomes much more comfortable for cars. And even you could have a 2-car there, whatever. So,
Okay. Oh, I
we
see. I
have
see.
in Palos Verdes, we have the entrance and you have the turnaround and you have to leave it there. And there's a minimum turnaround and all that. There's things that, so I see that much more doable and better. Everything on one side there.
Let me go
Except I
ahead
would
and
have to tear down a wall on the front,
yeah.
which would require permitting, and that would then take me into a year to hold the property versus 4 months to get it fixed and flipped.
But you,
It was
Or fixed
but
and rented, right? So if I was able to fix and rent the front,
mm-hmm. Yeah. So
well,
basically any
the wall can be
other
used, sorry, the wall can be used as a wall for the garage. I mean, yeah, you have to tear something, but you have to, the potential of having a lot of people say no and delaying the sale and having a much better property, you have to measure that, right? Yeah.
yeah.
Oh,
Hmm.
ideas.
Well, then the fact that there's some new development right here as well will be when you said you're going there on Monday too. I mean, that's going to be a great opportunity to see what
yeah.
kind of style they're using. Because
Mm-hmm.
am I correct in seeing the water's right there? Yeah,
It
that's
is.
right there.
That's the
Oh,
beach.
wow.
Wow. Okay. So you're one property removed from being right on the water, right
Yes.
there. Okay, and there's
And
your
that's
put in right
beach
there.
access right there. Yeah, exactly.
There's your beach access. Gotcha.
Mhm.
Okay. Well, I mean, your location, to a point, your location is going to override. People are willing to say, it's 30 seconds from the house to the beach put in right here.
Yeah.
That will
Mm-hmm.
help override a couple components. Like, hey, I don't mind sharing a driveway if I get 30 seconds to the beach, right?
Mm-hmm.
That's a real selling point here. Um, yeah, I think you have some cool options here. But I'd love to be kept updated on this one, how you choose to uh move forward. Because it looks like this guy is a cash buyer too. He's got no loan on this thing, which is awesome.
Right.
So he's just sitting on it. Just
Right.
doing, oh, he owns, see this linked properties button?
Mm-hmm.
So he owns multiple.
Multiple.
Uh, he just sold two off, all around the university. So yeah, he's been selling stuff off. Ooh,
Yeah, he's
you're
selling
catching
the
this
Y
guy.
and I properties.
Yep.
Yeah.
So he's in a sell off. So this is his last one on Y and I. He's already
Yeah.
sold two in your last one. So he wants to get rid of them. It's a good opportunity. It's a good seller situation.
Exactly.
Absolutely. Love that. Love that. Well,
Yeah, I'll
hope
update you on Wednesday
yeah, update me on Wednesday.
Hey,
after I
Eric, got
take a
something?
look at it and see.
Yeah.
Donato, I had a question on the math that you showed up before. Uh, were you saying, can you go back to that?
Yeah, right here.
Yeah. Were you saying that, so, oh, I thought you said she was going to put a 60% down.
Yeah, so what I was doing here, I'm basically, because our bird calculator is still under construction, I'm kind of
Oh,
cannibalizing
oh,
this into
okay,
like,
all right. All
so
right.
I'm doing like after the property's been renovated, let's say she split that and it's now worth 500 grand.
After
And
you're
Hmm.
doing the math after she refis.
yeah,
Hmm.
Oh,
yes,
okay.
correct.
That's what I'm saying. Okay, got it.
Yeah, sorry about that. I should have cleared. Where there are our co-living, seller finance, house hack, and bird calculators are all still being tweaked. I know we've been selling that for a while now, but we've just want to make sure they're right when we release them. So
Okay,
I'm
okay. So
saying,
you're saying leave more equity in the property.
mm-hmm,
Instead of 75%, leave it, make
yep,
it 60%, right? And then
exactly,
that would then satisfy achieving the make it cash flow positive,
yes,
because otherwise, yeah, that's, by the way, that's a big problem that I see, that you do have to burr it correctly and make it work. Given the interest rate, almost every single time you have to do that. You have to leave
yeah,
more money.
in particular.
Can't take all your money out.
And particularly in this situation, because it's not just a one property scenario, right? There are three properties here.
Right,
And if Dolores is done with the first property in 4 months, great. She still has another year and a half of development on the back too. And
right.
so what we have to consider is how much cash does Dolores want to be burning on a monthly basis by pulling out more equity and having a bigger mortgage? We're like,
Yeah,
wow,
yeah,
every burning two $1,500 or $2,000 a month in holding costs versus I can leave some more equity in for now and then just make sure the properties break even. Because at the end of the day, when the market's in a better position for her to sell it, she's got 60% equity. She'll make another 300, 400 grand, not even accounting appreciation at that point in time as well, for the market. So that's what I'm kind of modeling here.
yeah. Mhm.
I love
Thank you
these
so
conversations.
much.
Absolutely. It is my pleasure. Happy to do it.
Um,
This would be a really cool deal.
the other question, the market trends and this report, are you able to print that?
Yes, yes, you are. So let me go ahead and show this. When you click view report down here, so when you guys click view report, it creates the link. You guys were asking about and I still have this thing on purple and green. I got to turn this off. So remember, in your guys' accounts, when you're in BrightInvestor, you come up to profile in the top right.
Mhm.
This is where you can change the reports. So you click edit report, and if you want to put your name, your email, your website, your phone number, if you want to change the colors, if you want to change the logo, all of that is right here. That's where you can change and upload all of that. But once you are on the report, now we have this generate PDF button. Eric.
Mhm.
So when you click generate PDF, it will just essentially just create you a PDF that can then be printed out for this exact reason. So it creates a PDF. I click that, boom, printer friendly version ready to go.
So you went to your profile and got that, right? Is that how you did that?
So, so I went to the report. So this is the report that I got by
Yeah.
clicking the view report button. And then in the top right, it says generate PDF.
No, no, no. Before that, to get to this, you went to your own profile.
Yeah,
get?
so I was just showing that in the profile section is how you change the colors for your reports and how you can customize the look for them.
Oh, okay, all right.
But
So,
to get the report itself,
yeah.
all you have to do is look up a property and oh geez, 84-918 fair. There we go, Farrington Highway. Okay. So all you have to do to get a report is type in an address, open property details, and click view report.
Oh, okay,
And
got it.
once you,
That's
yep,
something I did see.
and
Okay.
yep, and then this shows up, and then PDF is here. And then once you have the PDF, you can just print it right away.
All right, cool. Thank you.
Absolutely. Yeah, that came out like maybe one release ago. Folks like yourself were asking, if I have a investor presentation and they don't want to use a computer or it's just easier for me to have a paper copy.
That's
Now you can print it.
that's exactly why I'm asking.
Perfect. Yeah. So that's now there. You can all print whatever you want there.
Hmm.
All righty. But that'll be a cool deal. I'm interested in that one. All right. Any other deals out there people want to take a crack at
I,
um today? Yeah.
I'm not. I don't have a deal, but a market that I'm actually trying to compare a couple of markets that are fairly close to one another in
Okay.
Highland, New Jersey. I'm
Island.
sorry, New York. What am I saying? Highland, New York. I actually tried to get on it this morning, and it seemed to be something up with the system.
So if you haven't logged in a bit, we'll need you to clear your cache and reset. We've probably done 4 releases in the past 6 weeks.
Okay.
Probably the first thing I recommend doing. I can resend you the link on how to do that.
Yeah. Can you? I did that
Yeah.
once, and it fixed the whole thing. But
Yep.
I just didn't know.
And we're working on a way with our back end to people, so you guys won't have to do that ever again. It's just a whole really boring, development project that our team's having to work on to make that work. But there's the link right here. I put that in the chat on how to clear your cache for it.
Yeah. 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 If you could send that, that'd be great.
Absolutely, it's in the chat right now. She's trying to compare Highland and where else?
New Paltz, which is right to the left of it. You see that? You see it right.
Yes, perfect. Okay, so let me do an appreciation layer. I'm gonna do appreciation, generate map. Let's see what's going on here from a market perspective. Okay. Right here. Okay, definitely. This is what I would call a COVID darling. This is like, for example, perfect situation of a COVID darling. Low to lowish, relatively flat home price growth for a bit. COVID hits, skyrockets, and then since then, from hitting its peaks of 550 grand, we're down to right around under 400.
Hmm.
So huge COVID darling. So I wouldn't be into this market I would be trying to avoid paying more than 400 grand right now for a property in this area. I'm going to add that as a layer, and let's go ahead and look up. I'll clear that. New pulse.
Now those layers that you just put in, is that
Mhm.
is that data and that chart that you just put there, is that printable now?
So let's go ahead and go to the Highland again for Highland, New York. This component, we had a PDF function that allowed you to save some things. There were some bugs with it, so we removed it to be able to work on it a little bit more. This right here
Right.
is not printable. This would be like the easiest way to do it would be like a screenshot. So
Okay.
screenshot this, throw it in a Word document. It's the easiest
Mhm.
way for right now.
Right.
Until we've been focusing a lot on the Bright report. So once
Hmm.
you have a property in this area, it's super. We put everything on there, the market research, everything, so it's really pretty there. That's where we've
Right.
been focusing a lot of our effort.
Right. Which is
So
what
if
you
I go
just finished
to,
doing with the property in Hawaii.
yep, exactly.
Hmm.
So we've been focused on making that kind of like the one-stop shop of everything I need to be able to show someone is there once I have this property.
Hmm.
Now for New Paltz, if I compare this one, let's take a look here on what's going on for appreciation. Wow. Okay, so pretty similar story, but also very different. So pretty relatively flat growth. And what's interesting about this market is that COVID didn't do a lot to it. It had a jump up, stayed relatively stable, and it wasn't until interest rates were already climbing that it started getting really popular. I mean, hitting a peak of over $1 million median house price.
Mm.
Right now averaging around 742. That's really interesting. Now, if I go ahead and take this, and I turn on my Highland. So, but all I did here was turn on my layer from
Mhm.
this area,
Mhm.
and now I can compare them side by side.
Mhm.
So this one's up 53%, this one's up 85% over the same period of time.
Right.
And though that right there is something that I would take, and we could just screenshot that and send that over as well.
Yep.
So
Great.
that's how I'd quickly do that from a layer component.
You just went you and those two layers are on the upper left-hand side, right?
Yep, right there.
Yeah. Okay.
That's just Eric. Also, I'm calling out a little bit. Since all your feedback on BrightInvestor for a while,
Mhm.
you've been one of the names on my home screen for like 2 months. As like getting as a reminder of all the things that we've had to fix. As full disclosure, guys, always been honest. When Eric came on, he had so many issues with BrightInvestor. That's like problem after problem after problem. It was completely our system's fault. We were not there yet. We had all these things going on, and he gave us so much amazing feedback on how to make it better. And he's been sticking with us and continuing to pour back into us as a company to help make the product better. So, Eric, really, really appreciate you, man. And you have been one of the people that I've been like making sure that we keep in mind because I think it embodies what we're trying to do with BrightInvestor is serve everyone. And if someone has a problem or an issue, make sure that we're there to make it better. So I just wanted to,
No, thank
you
you.
know, absolutely. All right. Any other questions, comments, concerns, anything else I can help people out with as our last few minutes for today?
I did want to mention, you know, to Lim, um, what I'm finding out, what's been interesting is that just on that STR issue, I'm most recently I'm just sharing some knowledge here. Most recently, I've noticed that I've been looking at markets that are actually midterm rentals, right? For two reasons. Number one, the the STRs, as you said, are there are communities that have a lot of regulations against them. But number two, I'm finding that in general, the midterm rental pays more than that of the long term rental, right? But there's a really good opportunity, given the right market. Um, and the midterm rental, historically has been around, what you call it, traveling nurses, which
Mhm.
is most popular. But it definitely fits in a lot of other categories that are now surfacing, especially since people, work remotely and what have you. Bottom line, and Furnish Finder is supposed to be like the place to go for that. By the way,
Mhm.
in similar to that of Airbnb. But the bottom line is that the most of these people, and by the way, one other example could be like an insurance relocation or things like that. Maybe something that you may want to look into. But one of the things that is attractive about that, just in by way of example, the nursing, the traveling nurse situation, is that a couple things. Number one, sometimes the hospital actually pays for the rental itself, right? So the hospital is your tenant, or the the recruiting company is your tenant, right? Or it's the actual nurses themselves. They're given a per diem. What's interesting is that they're given a per diem, right?
Mhm.
And which is not taxed, right? So they're kind of motivated. If they get $5,000 and they find a place for 3,000, they just pocketed $2,000 in their pocket, right? So, but oftentimes, putting that aside, they're willing to pay a premium for the place, right? And they want to live large. So when you work out the math and you're in the right market, and I'm saying this because a lot of markets I'm finding you just don't pencil out, given exactly what we just talked about. The interest
Yeah.
rate is too high, right? And so it never kind of like gets there, right? You got to, like what Donato said, you have to keep money in the deal, more money in the deal. But one strategy that I am exploring is the midterm uh, um, market as a potential, maybe even a plan B, right? Um, for your strategy moving forward. So I kind of, I'm really looking into that as an opportunity. And you have a number of different, you got one lot turning into three, separate parcels. It just may be something for you to put in your back pocket as you're strategizing for optionality to offer your clients.
Thank you.
Yeah, no problem.
Absolutely. There's another BrightInvestor user I met with about a month ago who does insurance rentals for midterm rentals.
Yeah,
It's exactly his strategy. That's all he
it's
does.
there. I mean, if your rental is $3,000, the insurance company's giving you 12 a month. It's ridiculous.
Yeah. So oftentimes they're doing math that says, how much does it cost me to put a family of four into a hotel for 60 days? And how much does it cost me to go to Dolores and say, okay, hey, I'll pay you $6,000 because the hotel's going to charge me $250 a night. Okay, great. Or I can, and that's over, I know, a month. That's going to be, $75 or $8,000. Dolores, you're $4,000. Great, no problem, done. And
Yeah.
so that's kind of that's the calculus the insurance company's doing for those types of for that kind of model, which is really cool. Also, I mean, something people think about for midterm rentals. This is on my midterm rental sheet: film crews
Yes.
and construction crews.
And construction crews. Yes.
So I know what I'm saying, but I'm just saying anyways. If someone owns a midterm rental around Los Angeles right now for the next 6 months, those construction crews need somewhere to go while they're rebuilding.
Yeah.
That is an exact situation where someone could be benefiting the community by giving those people a place to stay while they work on investing back in the community and also offering a great service while also making a profit. But like even in things like when cities are developing and putting in new bridges, new multi-billion-dollar investments from like companies like Fortune 500 companies, traveling construction crews are huge, and there's almost always like 2 or 3 hotels in an area where all the companies send their construction guys over and over again for like bulk rates. And if you can come in there and say, hey, I stayed at one not too long ago, and they're like, we're almost 100% occupied for 6 months out of the year because of all these construction crews. Relationships like that, where hey, if you send me your overages or you tell me that what construction crews do you guys, what companies work with you guys, then you call those companies and say, hey, if you have overages at the hotel or you want somewhere else to send your guys, I can house 10 of your guys for, $5,000 a month. And they'll go, holy crap, Dolores, look, you're my new best friend.
Yeah.
Awesome situation.
Thank you guys all for that. That's great information. I definitely will continue to research that on my end.
Absolutely.
Yeah, I
All
have a
right,
question.
everybody. Oh,
I
yeah,
was
go ahead.
Yeah, I was looking into your diamond program. It's amazing. And I see that you have things that I'm interested because I didn't mention this. My idea was I'm moving now into an apartment, right? I'm getting through because I'm older, whatever. But my idea is I thought of starting a co-living and I am stuck on a stupid question because I know the areas, I know all of what you just mentioned, but it's well, I mean, I'll be renting, right? Or co-living or MTR, right? Which I know also the business side of that. I've been following Jesse and I work in the medical field, so I have tons of connections, being that I've been living there. But where I'm stuck is on the contracts of the MTR. I don't know. And I definitely would like to sign for your diamond as soon as I start back working there. I think that it's an amazing opportunity to work with you. So, but the MTR, I don't know. I looked for books or to get something to a contract, you know, to get
Yeah,
it has a name that I'm renting it uh from
an
an owner.
arbitrage,
Yes.
Oh,
arbitrage. Yeah,
arbitrage. Yeah, yeah.
I don't
yeah,
know where to get that. If you can help me with that, guys, I'll start rolling because I'm
yeah,
going at the right time there. And I,
yeah,
you know, I have to tell you what, 20 years ago when I bought my house, I got sick because of a shot of vaccination, and I had to stop working for the schools. And my friend said, why don't you rent rooms? And it was a Chinese lady walking by. She rented from me with a tatami. Somebody else stood, and I started to rent. I was house hacking. And my
yeah,
son said, Mom, you were so smart. I was renting. I had kids from all over the world. I had Japanese, Chinese kids live. And that's how I survived until, you know, I had to sell it. Yeah, but I have experience, but where can I get this MTR? I mean, without going to a lawyer and paying.
yeah. So I've arbitraged units in my fourplex before. So I have leases that I've signed with people to arbitrage from me, and I also have a colleague of mine. She did 48 Airbnbs through arbitrage in less than 2.5 years, I want to say. She has been arbitrage master. So that's someone, actually, she gave
That's
me a lot of her
that's future
how-tos.
me. Yeah,
Yeah. So
I know how to do it. I have to just resettle my life, as I know it's been going for a little bit while, but I'm ready just to roll. So how can I get like something to start? Because I don't know where to start. Can I email you or something then? Or
yeah, go ahead and shoot me an email and I can see what I can do.
thank you. Thank you.
Absolutely.
And yeah, I think Dolores, you have yeah, a lot of opportunities with where we are talking. Yeah. Good luck.
That's freaking cool. And Dolores, you twist my arm. Yes, I'll come out and inspect the house when it's all done, and I'll have to stay. Yes, you know what? I understand. It's a big
Perfect.
favor to you, and I'll do it. I know it's just because I care.
It's a business trip. It's a write-off anyway, right?
Exactly.
What,
Exactly.
what's,
Like, okay,
what's wrong? You don't want to come to the freezing cold in New York?
yes. I'm in St. Louis right now, but I got like 6 inches of snow out there. You know how many times my car is peeled out in the last 48 hours? More
Wow,
than
not
enough.
us in New York. We don't have any
Yeah.
snow here. Do you have,
It's
Eric? Do you have snow where you are?
Actually, a dusting in comparison to Donato.
yeah, I've
Yeah,
got like and I was in
that
Tucson before that. I was in Arizona and I flew back to St. Louis with 6 inches of snow.
That's
That
great.
was my wake up. It was a good
That's
time.
great.
are
That's
you
great.
close to New Paltz, Eric?
I'm about 40 minutes south of New
It's
Paltz.
very nice there. I go there to Ukrainian resort close. So Yuzilka, I know that area and the people. It's very nice there.
Oh, really? That's good to know.
Well, New Paltz is very ritzy now. It used to be like hippish, you know, stuff.
Yeah.
And that kind of has that ambience. But Highland is next to it, and
Okay.
it looks like it's much more affordable.
Yeah.
I am tempted to look, but I know I have to be close to my family. So, you know, I hope that I get a visit to my co-living or MTR, dear Donato.
We can make it. Hey, I am always available to visit people's brand new renovated
I'll keep
MTRs
a
or
room
short-term
for you.
rentals.
I'll keep a
You
room
know
in
what?
my MTR.
That works for me. I'm no problem having a network of midterm rentals I can go and hop around. That's a-okay with me.
Definitely.
Yes, soon
But
as I'm back from the wedding from Guadalajara, they invited
perfect.
the in-laws to stay there for 2 weeks. They want to show me they're like, oh, do you mind going there in the village where we were born? I'm saying, mind? Just leave me there after New York.
Just leave
Leave
me
me,
alone.
drop me. I
Perfect.
need silence and birds and stuff. Yeah,
Perfect.
I'll still be here next week. Hopefully I can connect. I have all my alarms to see you on Saturdays. Are you still on Saturdays too, right? I mean, Saturday and
Yep.
Wednesdays. And when I
Yep.
catch, well, Wednesday I have a yoga class, my last one at the same time. And then I'm flying Friday. Wish me luck, guys, with the airport, with cargo. I'm doing cargo, and I'm friends now with the operating, with the manager of all Southwest Cargo. So he's going to oversee my cargo, my dear real estate books and all that stuff that's going there. And yeah, I'll see you on the other side.
Thank you
Sounds
so
good.
much. Good luck.
Bye
You
now.
guys have a great
Absolutely, guys.
weekend.
You too. Bye.
Thank